Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the global commodity space has started 2023 in a strong way. Gold prices are headed for a third monthly gain in the month of Jan. Metals like zinc, aluminum and copper and commodities like sugar and rubber also are seeing a positive start to the year. But few commodities like silver are seeing a decline and trading in the negative. With major meetings like US Fed, monetary policy meetings in major banks ahead, how will the global commodity markets get affected? What is the outlook for Indian commodity sector ahead of the Indian budget session on Feb 1? To answer all of those questions, I am now joined by Peter McGuire. He's CEO at Exim Australia. Peter, hi, good to have you. And what a start to commodities. The first month of 2023 clearly seems to be closing on a positive note here. But then this week is so data heavy. You have the US Fed's first meeting slated, the Bank of England ECB meetings also in this week itself, the US Fed first. And what are you anticipating from that one?
Well, I think, and lovely to join you, Manisha. Greetings from Sydney. We sit here in trepidation. We're not sure exactly, and no one knows except Jay Powell, I would say, Fed Chair Powell, what his rhetoric's going to be and how he's going to read into, a turnaround as far as US equities over this month. There's been nothing short of outstanding. And the overall, I think, themes moving forward is inflation under control in the US. We've had oil prices up, now they've come back a little bit, so there's a fair bit of volatility across the markets and certainly a sinking US dollar that's fallen more than 10% in the last 3 months. So that must give him some lines of satisfaction, but I'm sitting here probably saying 25 is where we're going to be, and how he, I suppose, discusses that and relays that to the marketplace, that's what we're all waiting on.
Oh, absolutely. But 25 basis points from the US Fed and a possibility of a 50 basis point rate hike from ECB and Bank of England. What will that do to the dollar index?
Well, I'm no doubt that would probably, that's where consensus is, and I agree with that. So I think that's going to put a rocket under the euro, so probably 110, 111, and many analysts are saying it's going to be a 1.15 over the next matter of months. As far as the pound's concerned, I don't think it's going to do the economy any good, but it'll certainly probably strengthen the pound. We're sitting at 1.2325. So I think you're probably going to be looking at a 1.25, 1.26 in the short term. So I think further increases across the currency complex against the US dollar.
So the markets pretty much have factored this in. There's no surprises if this is exactly what we see. But any changes onto this, any guidance, any commentary that the markets are looking forward to right now? How would you look at precious metals to begin with?
Well, I think here, and I take a deep breath when I answer this, Manisha, we've seen a dramatic move to the upside for silver, gold in the last, 3 to 4 months, nothing short of outstanding. And even though it's sitting back here at 1920 or 1918, I've got it on the screen here now, it's had a bit of a wipeout today, but it's had such a big move up. It's a consolidation phase. We're waiting to see what happens as far as Fed Chair Powell and the other central bankers. But I think that there is plenty of upside left yet for the precious metals, and there seems to be a major attraction with currencies being whipsawing and US dollar coming under much pressure to the downside, that retail are looking at certainly holding physical and, of course, paper markets.
All right. To the energy space then, and Feb 1st really is going to be a very busy day. You have the US Fed meeting, but you also have the OPEC and allies first meeting of the year as well. What are you expecting? Will this stay put on the 2 million barrels per day of output cut? That's what they've said for 2023.
Yes, I don't think that I'll see any surprises. And I think it'll just be, ticking the boxes and, handshaking. I'm not expecting any surprises, Manisha, though. It's easy to say that, and then all of a sudden something comes out of left of field. But they've had a nice move to the upside crude over the last 3 to 4 weeks. So that would be pleasing, I think, OPEC. And I think the consensus, there's issues naturally with that Iranian attack, and they're saying it was by Israel and a drone. There's also talks naturally with the Ukraine-Russia situation. So the geopolitics is still there. Nothing's flared it yet, but we'll just got to wait and see how that all works through the market as well.
So what's your sense on where do we see support coming in for the crude oil prices? Because the Russian supplies have just about continued. China reopening is another very positive factor.
Yes, I think so. It's been, and that's a terrific opportunity for naturally any oil exporter to be, pumping oil into China because of the huge demand, and they're open the gates, and it's game on, considering we've put Lunar New Year behind us and the markets are back open. People are, I think, embracing their freedom to some extent across China. That's what the word is, and naturally there'll be more travel and more consumption, so it'll be a strong point as far as demand picture. And I think that's a good sign, naturally, for all the producers, and certainly it probably will go very well for Russia in a lot of ways.
Also, what's your sense on the metals? Because the current week has seen some profit taking after, a stronger Jan. Most of the metals seem to be closing Jan on a positive note as well. But then again, you have the US non-farm payroll data on Friday. So there's no dearth of events and data coming in for this week. Any favorite trade that you see within metals?
Well, I'm keeping a close eye naturally on copper. Tin's had a dramatic move. It's nearly at 30,000 a metric tonne. It's moved up nicely. So is aluminium and zinc sitting at nearly 3,500. So all of them have really performed very, very nicely over the January period, Manisha. It's been a very good month. But where that moves forward, I truly feel that you'll see more demand and really China, restocking of inventories and really, taking the bull by the horns a little bit. And I wouldn't be surprised it's going to be game on for, from commodity consumption. So I think that's going to be strong internal demand in China. And I think the overall picture could be quite rosy. As we know, there's a critical shortfall globally with copper and, of course, with a lot of the base metals as far as CapEx expenditure. So investment has been lean over the last matter of years, and that's going to come home to roost one day.
Oh, clearly that's a rosy picture really for the metal space there. And crude prices also could see some support with the kind of demand that China is expected to open up going forward in the days to come. Thank you so much, Peter, for joining us. So all eyes clearly on the US Fed. As of now, much of that has been factored in, but stay cautious on any surprises that really could be thrown in. With that, we'll stop for a short break. When we come back, we will talk about the budget because that's coming in tomorrow as well. And ahead of that, what are the expectations for the agro and the non-agro space that India could watch out for? We come with all of that after this break.
Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
Everything we know, everything we love, might well be at risk. The time for action is now. Together, we can be champions for the Earth.
It's the electric SUV with the fastest acceleration in India. It's the most spacious in the C segment, and it can be yours now. Starts at rupees 15.99 lakhs. Bookings open on 26th January 2023.
When it all began, I had only a few runs on the scoreboard and fewer spectators in the stands. And then what? I worked harder, a few more runs, and a few more spectators. And that's how from Saurav, I became. When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan, like Bandhan Bank, India's fastest growing bank. Bandhan Bank, aapka bhala, sabki bhalai.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
When challenges put you off, you put life back on. Full on.
Life on with Live life now full on.
Begin your journey towards a healthy tomorrow with Omron today.
देखो 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 नया टीवी देखो. Aha! Got the veggies from Chotu's shop? He gives the right rate.
Yes, Papa.
Decided. 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will, with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
Low Emission Premium Plus by Century ProWood.
Welcome back. And the Finance Minister Nirmala Sitharaman tabled the economic survey in the Parliament today. With respect to agriculture and food management, the government aims to promote crop diversification and to augment crop and livestock productivity. The economic survey also lays emphasis on ensuring certainty of returns to the farmers with the help of price support on the eve of Budget 2023. What are the key expectations from the commodity and agriculture space? Will the budget revise the commodity transaction tax levied in 2013? To discuss this, I am now joined by Siraj Hussain, Senior Visiting Fellow at Indian Council for Research on International Economic Relations, also former secy in Agriculture, and Kunal Shah is Head of Commodities and Currencies at Nirmal Bang. Gentlemen, hi, thank you so much for joining us. And Kunal, I'll start with you first. CTT seems to be one thing, one agenda that almost all the commodity participants really seem to be pushing on whether it can be lowered or waived off. What's your sense during this budget now?
Yeah, it's a high time, Manisha. The way India is growing, we are the fastest growing economy in the world, and we stand at a $3.1 trillion economy. From here, our journey from 3.1 to 5 trillion, 6 trillion is going to consume a lot of commodities, and hence the importance of commodity market in India is going to be more and more going forward. So now it is a high time where we come to a point where the transaction cost on the commodity exchanges in India should be brought down, because most of the hedging is now going through international exchanges. So the volumes 10 years back in the Indian markets were quite robust than what it is right now. So the potential, even from the job creation point of view, this market has is phenomenal. So it is a high time where the policymakers should take this into account and reduce the commodity transaction costs. This market is going to favor the economic growth and also going to create jobs. So whatever revenue loss they are going to have, which it will be amplified in the terms of volume, and eventually that revenue loss also will be met by the higher volumes. So it's the one thing which everyone is hoping for, and even I'm hoping for, that let us see that they do it or not. But I keep my fingers crossed if it happens. It's a great news for commodity market.
Oh, well, absolutely. Kunal, are you also anticipating some incentives to hedge within the Indian markets? Are you also allowing mutual funds or other entities to be allowed to hedge in commodity derivative market here in India?
Yeah, so yes, that kind of announcement also expected, and that will definitely boost the sentiment. Already we've seen domestic mutual funds have increased their participation in commodity exchange, but with the rising volume in the commodity exchange, I think we'll see more and more participation even from the mutual funds. So yes, that kind of announcement also would really cheer up the market, and it is anticipated from the budget.
Kunal, the other important thing from the non-agro space clearly has been about gold, silver, diamond import duty. I mean, this is something that the industry has been putting forth that would impact the kind of trade that we do in case of India as well. Any sense, any movement that you think the finance minister could look at that way?
Well, logically, if you ask, because of the higher duty, we are seeing a lot of gold coming out of India in illegitimate ways. And that is not something which the ministry will like over a period of years. So there has to be a rationalization of duty going forward. But that also comes with a cost right now, and India cannot afford the stage right now. So a nominal cut just to cheer up the market sentiment can be expected. But I'm not expecting any major or drastic cut in an import duty of gold or any other precious metal. So any cut would be welcome by the industry, which can trigger some downside on the domestic market, but I'm not expecting any hefty cuts in the import duty. So at this juncture, curtailing the gold imports also remain quite important. The higher duty are definitely is helping some of the costs, but eventually all those gold is coming out of some of the other ways. So I think some rationalization is expected, very nominal, but I will not be surprised if it comes.
All right. So some expectations, not a huge one, not a very happy one, but some movement perhaps could come that way. Well, that's about the non-agro and, of course, the commodity trading part of it. But agriculture clearly had a lot say in the economic survey that got released today. Mr. Siraj Hussain as well joins us now. Mr. Hussain, one, what is your pick from the economic survey? And the other thing really is that there are a lot of comprehensive policies that the market really seems to be anticipating, whether it is about feed and fodder, irrigation to be converted into an infrastructure as an industry, given that status there. There's a long list here too.
I think the economic survey has done well to highlight India's success story as far as inflation management is concerned. We should consider ourselves lucky that now our food inflation is less than 6%. And it was due to some deft management and timely decision-making to ban the export of wheat, impose export duty on rice, etc. Also, the government had entered into long-term contract with some African countries and Myanmar for import of pulses, so that has kept the pulses prices also down. So all this has contributed to what one can say is reasonable level of inflation under 6%. So that is a good news, and that is despite very high edible oil prices when Russia invaded Ukraine. As far as structural changes in the budget are concerned, in the agriculture sector, I do not think that the government is going to give any concession to future trading. A wrong decision in my view, because now the Indian edible oil importers are not able to hedge their imports, so bad for them. Similarly, I'm not really anticipating any substantial hike in allocations because the government's budget constraints have to be remembered, and now defense has to be allocated extra amount. So I think on the whole, as the economic survey shows, it will be some kind of business as usual approach.
All right. You know, a lot of push has been on technology, digitization. Are you anticipating much there?
Actually, digitization has been proceeding in bits and pieces. And so far, despite all the investment which has come into that space, we have not really seen a technological breakthrough, even in the assessment of the size of crop. However, there are a number of areas in which technology is coming, and especially if you see India's agriculture story of the last 2 decades, PUSA 1121 was basically due to research by ICAR system. In sugarcane, CO 0238 was because of ICAR, Dr. Bakshi Ram, who was awarded Padam Shri this year. So what I want to see in the budget is basically a higher allocation for agricultural research.
Okay. Mr. Hussain, also there has been an ask about crop insurance, especially when dealing with weather anomalies. I mean, that really seems to be the buzzword right now. Cattle insurance is yet another thing. And you know, carbon credits associated with agriculture is the third point that the street really seems to be raising on. Anything out of this three which has a possibility of being there in the budget?
You see, cattle insurance is already there. It has not been very successful, but it has been there for decades. Similarly, the crop insurance scheme has gone under several modifications, and what actually the expectation is that every type of calamity will be insured. Now, if you were to insure every type of calamity, including the local calamities, you know, local flooding, which has been misused in several states, especially as the report suggests in Haryana. So then the premiums go very high. Then the claim ratio is objected, and people say that you know, private companies are making profit and all that. So there is a bind there. Now, I do see some possibility of carbon budgeting helping agriculture. So that is very much a possibility.
The other big one clearly has been the announcement of International Year for Millets, and we've seen a lot being done there. Are you anticipating some subsidies for the push to this one?
I don't expect any subsidy as such. What is possible is that government may like to procure some quantity of millets which will raise their prices above MSP. Fortunately, for most of the crops right now, the prices are above MSP, so the government doesn't have to do much. However, the government is doing well, I would say, in promoting the consumption of millets by the better off sections of society. If these sections of society start consuming millets in their daily breakfast or daily lunch or dinner, then the prices will go up. The farmers will also realize better prices. And in general, it will also improve the health of the consumers. So I do not see much intervention of the government coming, except in the form of promotion of millets, which is the right strategy to do, rather than giving financial support in a form of MSP. Because then what do you do with if you procure a very large quantity of millets, what do you do with that?
Sure. Mr. Hussain, one final question, and the economic survey clearly pats its back when it comes to the MSP, the production of food grains, the free food grain distribution as well, and then of course talks about organic farming and FPOs and the work that is being done with that as well. Anything within this that you expect to be addressed within budget too?
I have written about free food grain scheme. I am not a supporter of that. I don't think it was necessary at this point of time, but then so many assembly elections are due this year, parliament elections are due next year. My problem is that any future government will find it very difficult to charge anything for the food grains. So that is not a good policy for the long run.
Okay.
However, I think many of the announcements, populist announcements, may be made only in the next year's budget.
Sure.
I do think that, and I hope that government would have realized by now that APMCs still remain the major source of information on prices. And therefore, we need better information, more information, accurate information, correct information about the variety of grains which are being traded, due to which there is no parity across the APMCs. So investment in the APMC's infrastructure is what I'm looking for. In fact, 3 years back, I think the government had announced a scheme for modernization of hearts, smaller hearts which are not APMCs.
Right.
But somehow that also did not take off. I wish the APMCs, most of them are very weak in different states, except in Punjab, Haryana, and Andhra Pradesh, Telangana, etc. So we do need investment there so that farmers can realize a better price. They have better and timely access to information.
Absolutely. Before we wind this conversation, Kunal, a final question to you as well. How do you look at agriculture as a space from the commodity trading point of view?
Well, in commodity agriculture, I expect that going forward, more and more commodities should be brought in the futures trading with the confidence that they will not ban. So I think banning commodity is not good for the markets. We've seen that even the price mechanism, the pricing which used to come from the exchange was one of the good ways the farmer were getting idea about what is happening in the market. So I think it's the time when we should be more liberal towards agriculture commodity trading. Remember, there are empirical evidences which indicates that because of the futures trading, the prices of commodity is getting a good price mechanism, good price discovery. So I don't think so that we should ban commodities. We should come up with the more confidence to the market and allow more and more commodities to be traded on the commodity exchanges.
So hopefully we will hear something about that during this budget as well. But thank you so much, Kunal, Mr. Hussain, for joining us. So a very, very eventful day lined up tomorrow. You have the Indian budget. You also have the US Fed meeting, the OPEC and allies meeting as well, talking about the crude there. So there's a lot to watch out for, and we'll, of course, help you doing that. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.
Co-presented by LIC.